California housing market 2026. Are home prices going to crash in select cities? Today, we're ranking top 10 California cities most at risk of price declines next year. We'll break down real data, affordability pressure, demand trends, and local economic challenges that could push prices downward in these markets. National forecasts show home prices modestly rising overall in 2026. But behind that headline is important variation. Some metros are softening, others are stable, and a few could see home price declines. This list is based on latest housing data, local price trends, and economist forecasts. Let's count from 10 to 1. 10. Sacramento Metro. Slower price growth plus inventory increases. Inland markets softer due to migration shifting toward cheaper out-of-state alternatives. Rising mortgage costs have reduced buyer demand. 9. Santa Rosa. Residential home values were flagged by Zillow Regional Forecast as among CA metros with home price decline potential into 2026. Weaker demand due to high cost of living and limited new job creation. 8. Chico. Zillow's regional forecast shows Chico potentially cooler than national/CA price trends. Smaller employment base and weaker population growth make demand fragile. 7. San Francisco. While SF remains pricey, some indices project slight price weakness rather than robust growth, reflecting high cost versus tech job volatility. Luxury segment inventory remains high. Unsold high-end homes suggest downward pricing pressure. 6. Fresno. Central Valley markets like Fresno may feel pressure from below-average wage growth versus housing cost increases. Mortgage rates still elevated relative to historic averages, suppressing local demand. 5. Stockton. Already lower prices compared with coastal CA, but softer demand and slower job growth. Historically volatile market with price corrections following rapid expansions. 4. Riverside/San Bernardino Inland Empire. Inland Empire historically sensitive to interest rates and unemployment shifts. Mortgage rate stress reduces purchasing power and can push sellers to lower prices. 3. Sacramento Foothills/smaller Sierra cities. Smaller markets show price increases lagging statewide trends, with seasonal weakness more pronounced. Higher carrying costs, insurance, climate risk push buyers out. 2. San Jose/Silicon Valley. Though still expensive, Silicon Valley shows softening. Remote work and cost pressures keep some buyers sidelined. New construction permits declined sharply, signaling developer hesitation and stalling turnover. And 1. Los Angeles Metro. LA faces moderating price growth with inventory rising slightly, but demand cooling relative to past years. Elevated mortgage rates plus affordability issues pressure buyers. Even though CA forecasts show overall price rises statewide, LA is one of the most sensitive to affordability corrections and could see localized price declines. High mortgage rates reduce buyer demand. Mortgage rates remain elevated compared with historic lows, which dampens buyer activity, especially among marginal buyers. Affordability gap widening. In CA, monthly housing costs remain extremely high relative to incomes, leading many buyers to pause or look elsewhere. Inventory increases in some metros. Where homes sit longer or more sellers list, prices lose upward pressure. Tech and remote work shifts. Employment centers shifting has real estate demand follow. Out-migration pressure. Some residents leave high-cost markets for more affordable states. Important. Major housing forecasts currently do not show a broad California crash in 2026. The state median price is expected to rise modestly. These risk rankings are based on relative weakness compared with overall trends, and regional forecasts indicating cooling or potential price decline in specific metros. Always consult local experts before making real estate decisions. Which California cities are most at risk of a 2026 home price crash or decline? Our list from Sacramento to Los Angeles shows where affordability stress and local market dynamics could tip prices downward. If you found this analysis useful, like, subscribe, and leave a comment with your city prediction for 2026.